Welcome to this first main section, guys. Today, we're going to be talking about the most common reasons that traders fail. Okay, now this is going to be the most critical video that you need to start on, especially if you don't understand the concepts in here. Because the problem is that most traders come into trading and they immediately start learning the strategy. They want to know the specifics and the little things that they can do to immediately start making money. And the problem is that if you want to be consistent long term, then you need to understand exactly what I'm going to be talking about in this video, okay? Because it's not really talked about as much as it should be, and I want to give you guys the best possible chance of reaching consistency. So in a word, or in a phrase I should say, the reason that most people fail is they don't understand or accept probabilities. This is so important, okay? Because you've got to understand that trading is not about being right, okay? It's about finding a strategy that fits your needs, and that's going to mainly be about blending a nice balance between win rate and your risk reward. So your kind of percentage win rate and your risk to your reward ratio, okay? Now, most of it is going to be blending these two to fit your personality and, certain traits that you have. For example, you might prefer a higher win rate if you're new because you are less likely to go through streaks of losses. And I'll get onto that in just a second. But for now, I just really want to make sure that you understand what I mean by probabilities. We're going to be talking about these things and the relationship between these two in another video in this section. But for now, I want to give you an example of how probabilities works. So if this is a standard coin, okay, we've got heads, do a little stick man there. And on the other side, we've obviously got tails. Okay, now we know that there is a 50-50% chance of it landing on heads or tails. Okay, but I know that if you have done a coin toss in some form or another, which I'm sure most of you have, then you're going to know that generally your results aren't going to be win, loss, win, loss, win, loss, win, loss. They're never exactly 50% just straight off the bat. It's not like every single one you're guaranteed to see a heads, then a tails, heads, tails, heads. It's just not going to happen. What's much more realistic is that you see heads, 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 tails, heads, heads, tails, 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 heads, tails, heads, tails, 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 something like that. Okay, now just looking at this, okay, when you're in the moment and, let's just say that each one of these is a trade, we've got wins and losses, okay, when you've just come off the back of 4 losses, you are going to be thinking, oh my God, am I doing something wrong? That is very, very natural. Okay, but what most people do wrong is when they coming off the back of losses like this, they will go and switch their trading plan. Okay, now this kind of brings me on to the next point. Okay, because if we know that we can't predict the next sequence of trades that we're going to get, meaning we don't know whether the next trade is going to be a win or a loss, okay, then the next thing that we need to understand is what our edge is. Okay, and look, it's no secret that if you have a 50% win rate like this, then you can't have a 1-to-1 risk reward, because that means that for every trade that you win, let's say 2%, and for every trade that you lose 2%. And if it's 50-50, then over 100 trades, you're basically going to be at zero, at break even. Okay. And so creating rules ahead of time that ensure that you have an edge towards winning over the long run is basically the next step building off probabilities. Okay. And so an example is if we start off with that same 50% success rate, we could maybe push that to 65% by adding a particular type of trend filter. Let's say maybe we're using an EMA or something like that. Okay. Then we could maybe expand on this further by maybe changing to a 1 to 2 risk reward. Now, as I'll explain in a video, the later video in this section, that means that you're going to have a lower win rate. So let's just say that reduced our win rate back down to 55%. Okay. At 1 to 2, that's pretty good. So let's say that you've tested this out and you found that this is profitable over 100 trades. Okay. Now, what you've got here now is you've got some very set in stone rules that you've used to test this particular plan. And these rules are what are going to basically allow you to be the casino in trading, because it's going to give you that edge that ensures that over the long run, you are going to succeed and be consistent. Okay. And this is what's known as your trading plan. Okay. I've kind of butchered that. Let me just type this out. Your trading plan. Okay. So if we bring it back down here, okay, when we are seeing these strings of wins and losses and blah, 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 if we think it back to the coin analogy, the coin is our trading plan, okay? Because the coin is what's basically determining the rules. We know that a coin is always going to be the same coin, which is what ensures that the probabilities are going to remain at 50%. In the same way, your trading plan is going to be what ensures your win rate and your risk reward, okay? And therefore, okay, with your trading plan, if you are consistent with it, then you will get consistent results. The number one reason that people fail is because they will see a few losses, they won't be able to accept it, they won't understand what's happening, they won't have a tested plan, okay, and they will begin changing parts of their strategy, okay? Now, it's exactly the same as if you started, you had a 50-50 coin here, and after each loss that you had, where you just wanted to get heads, for example, you began modifying the coin. Okay. And what that's going to do is it's going to change the weight of the coin. It's going to change the statistics of which side is more likely to land. And what you're going to end up doing over the long run is guaranteeing that not only you'll be at break even, but you'll actually be on a downward slope. Okay. Because if this sequence here that we see here, if this sequence is what this trading plan does, this trading plan does, then if we begin switching our plan after this point down, so let's just cut from this point down and we switch down to this kind of track, okay, then we might have another 5 or 6 losses in a row, because we're changing and then we change again. And then, we might see more losses, but over the long run, you're going to be messing with your own statistics, okay, which means that over the long run, you're going to be losing, which is not what we want. Okay. So let's take this one step further and look at the concept of probabilities in terms of how likely is it that you're going to go and get a losing streak depending on the win rate that you have. So this chart is something that FTMO published, and it basically talks about the probability of seeing at least X being one of these numbers along here, consecutive losing trades within a 50 trade period. Okay, so the probability of seeing 2 losing trades in a row, probability of seeing 3 trades in a row, 4, 5, 6, 7, 8, 9, 10, 11. Now, down here, we've got all of the win rates. Okay, so if we start at 50%, okay, so the example that we've been using on our chart over there is 50% win rate. We can see that there is a 97.1% chance of having 6 losses in a row, okay, within a 50 trade period. So that means every 50 trades, there's almost a guaranteed chance you're going to have 6 losses in a row. Now, that might be quite shocking for a lot of you because, when you think about trading and having a better risk reward, and, people are like, oh, well, you can have, if you only need to win 30% of the time if you have a 1 to 3, or and it's more like 25 or something like that. But what they don't tell you is that the win rate goes down the bigger the risk reward, and also the chances of you having a losing streak massively goes up. So let's say you have, a 40% win rate at 1 to 3. Okay, you have a 71% chance of having 7 losses in a row, and you have about 50-50 chance of having 8 losses in a row. Okay, now I can tell you from experience that going through multiple losses in a row like that, it is very, very difficult to deal with psychologically, especially if you're new, because you think that something's going wrong. You don't have the context to be like, okay, well, I know that this has, worked over the long run, because you're new and, you're just getting into it. You don't trust your ability just yet. And so this graph is a really, really nice way of preparing yourself mentally. And in later sections, when we're going through back testing and stuff like this, we're going to be applying this and taking the results that we get from there before we go into anything further. And we're going to be looking at these results and looking at, what the kind of likelihood of losing streaks are for our particular strategy. Okay, now I always recommend to beginners that they start on a lower risk reward and a higher success rate, because you're going to get less chances of seeing losses. And so, for example, if we have a 70 to 75%, let's say we had 70% success rate, there's only a 31.8 chance of having 4 losses in a row. Okay, which means more than likely, most of the time, the max you're going to have is 3 losses in a row, which is a lot easier to deal with than 6, 7, 8, 9, 10, 11. Okay, so I hope that that makes sense. So just to kind of hammer this point home, if you change your trading plan, you're basically destroying your edge. And in a sense, what you're doing is you are resorting back to gambling. You are removing your edge if you were the casino, and you're going back to being a common gambler. Now, in some cases, this is okay. For example, sometimes I will switch between trading plans, okay? But I would not recommend doing that if you are new, okay? Now, even then, like the only times I will switch plans, I know that I'm switching to a plan that I've previously tested and I'm very comfortable with. I don't just randomly switch. Like if I have a trading plan that's like, right, okay, if I'm, just as an example, if I'm above the 200 EMA, I retrace in a trend, I enter on a candlestick rejection. If I have a series of losses, I'm not going to add, okay, well, maybe I need the 100 EMA as well. Maybe I need to, wait for this other pattern. Maybe I need to go down to a lower time frame. I'm not going to be changing these things, because that's going to be messing up my trading plan, which is going to mess up my probabilities, which is going to mean over the long run, I am going down. Okay. However, if I had a plan that I've tested and one that I'm already very comfortable with, I will happily change if I see that particular setup, but I will follow the rules of the other plan. But again, all of these rules are predefined. If this happens, if this happens, if this happens, I'll enter the trade. Okay. If this happens, if this happens, if this happens, I'll enter the trade. Okay. So it's very, very important when you're just starting just to stick to one. Okay. So that's pretty much it for this video. And look, understand that for now, the most important thing is that you just understand this conceptually, because this is the lesson that I wish that I had had when I first started. It would have saved a lot of losses and a lot of misunderstanding about the markets and how they actually work. Now, I'm going to talk about how to actually overcome and accept losses and the other emotional aspects of trading in the later sections, after I've talked about strategy and success habits and other stuff like that. Um, but yeah, so for now, just understand this conceptually, because it is a really, really important thing that you are mentally prepared. So thank you for watching, and I look forward to seeing you on the next one. And I'm going to explain some really, really interesting things on the next one. So stay tuned for that. I'll see you soon.